Hello, greetings. Welcome to Dividend Blasters. This is our 105th video. Topic today, growth and income. These Bitcoin ETFs are the smart move today. And for 2026, I'm going to talk about two Bitcoin ETFs. One which I've invested in for a while, and a new one which I recently released a video on. The new one is BTCI, and that is managed by Neos Investments. It's an income based ETF. It generates superior total return, no NAV erosion. It has a great options overlay strategy, and it generates options premiums and distributes them monthly to investors. The other one is IBIT, and that is managed by BlackRock. iShares, it's part of the iShares family, and they differently invest directly in Bitcoin. Unlike BTCI, which invests in derivatives of Bitcoin, IBIT holds Bitcoin, and when you invest in IBIT, you don't get a distribution, but you get maximum market growth. That's what I'm after. I want both. I don't like NAV erosion. I like distributions. So to me, that is why I am a growth and a dividend investor. I want it all. First, a disclaimer: what you hear is not advice. This video is for information and education. It reflects my opinions, research, and experience as an independent investor for more than 30 years. So do your own research, your own due diligence before making any major financial investment decisions. I want to show you this table. I'm just going to show you briefly, and it's for context purposes. The reason I'm showing you this is to show you what some of the leading investments are over the last 10 years for different time frames, year to date, 1 year, 3 years, 5 years, and 10 years. These are total returns. The investments that are shaded in yellow are the spot price for silver, spot price for gold. Going down the list here for year to date, so you can look at the yellows as I go to them. The NASDAQ 100 index, which is NDX, the spot price of Bitcoin, BTC USD, and the S&P 500. Okay, and you can basically see, the leading investments for year to date: Seagate Technologies, Palantir, Oracle. Then you start to get the spot price for silver, and you can see the total return. I'm not going to read all these. You can read these. And again, these are not an exhaustive list, but these are the most important investments, the leading investments. The major takeaway from this slide here is this: look at the last 10 years. And this I will say with certainty: the last 10 years, Bitcoin has returned more than 45,000% total return. Okay, total return. Um, that's what it's done by far more than the next one. And Nvidia has done awesome, 29,000, almost 500%. Then there's a precipitous decline. Broadcom 3,400%, which is great. Tesla 2,568%, which is great. Palantir, which is the darling today, and is really going to play a major role in artificial intelligence. A lot of these companies are. But why am I showing you this? Because what I'm conveying here is that if you ignore Bitcoin in any fashion, you're doing it at your peril. Bitcoin is something not to be ignored. Bitcoin is actually becoming more institutionalized. I mean, you've got ETFs being issued that are Bitcoin focused. I am investing in two of them right now. So, anyway, that's why I'm sharing that with you. You can go back and look at this, research it. So, full disclosure, I invest directly in Bitcoin. I have a number of IRAs, self-directed IRAs, and one of them has Bitcoin, has Ethereum in it. And I've been invested in these for a number of years, and I'm glad that I do. I also have self-directed IRAs where I have physical gold and silver in a vault out of state somewhere. Not going to tell you where, no, but it's in a vault. Uh, and then again, I invest in both of these ETFs, IBIT as well as now BTCI. And why am I doing this? I believe in Bitcoin, but I also believe in two things here. I want to broaden my exposure to the best performing asset. of the past 10 years. That, and then also, I am for just about anything that will enhance my monthly distribution income monthly. That's what I want. I want to get that. And I also don't want to sacrifice the underlying value of the asset. BTCI, and like all of Neos investments, they do a really fine job, as do a couple of other asset management firms, uh, does not sacrifice NAV. They do not. They're very responsible, and I like them. And I also own SPYI and QQQI, and very satisfied with those. So anyway, that's my full disclosure. And so, why do I invest directly in Bitcoin? Let's just kind of handle this real quickly. It's a great hedge against inflation. We know that inflation is a tax on the purchasing power of us consumers. We don't like it. Bitcoin is a hedge against that. Uh, some say gold and silver are as well. They're a little different, but yes, they are a hedge. More like an insurance. But Bitcoin, and as we've seen, gold and silver, which are doing really well, are a decent investment. They're all doing very well this year. Um, Sometimes we question the strength of the dollar, and also we want to do a little bit of diversification. I will tell you that I do not see any other fiat currency, and that's what these are, the US dollar, and as well as any other money currency of countries. Um, I don't see any of the others challenging the US dollar. The US dollar is the reserve currency. It's by far the best. It is not perfect. And history tells us that fiat currencies do not last forever. But having said that, I am very comfortable with the US dollar. But as an investor, I like to have options. And that is why I like Bitcoin. I also like physical gold and silver. All right, let's move on. I also invest in it because I truly own Bitcoin. I own, you know what? A lot of folks that own Bitcoin, they have a digital wallet, they have a key, they own it. Mine are in an IRA, so I don't have that. Um, so I am basically relying on a custodian to do that. But most people that don't have that, they have a digital wallet, they own it, but they better not lose the wallet or the key. Um, if you have a wallet, you have full use of the Bitcoin network. You can transact peer to peer with other folks that are on the network. You can also make purchases. I wouldn't advise making purchases with Bitcoin if you can avoid it. I'd say hold on to it as long as you can, because there is just a lot of really positive movement with Bitcoin today. There's really no fee. So, like with ETFs, there's always a management fee. With Bitcoin, you really don't have that. Potential tax optimizations, you're not getting a distribution or a dividend with Bitcoin. It's all going to be market performance. So, there's really none of that. Third party risk or counterparty risk, there's really none of that. If you have a wallet, you have the key, you basically are taking on all the risk. It's pretty safe. Just don't give people your key. You have great liquidity and you have global access to this Bitcoin network. I like it because I feel that I have added flexibility to recalibrate my exposure. So I have my Bitcoin in an IRA. I don't really move it around, it's there. But I like to have that added exposure in my brokerage account where I can add more ETF exposure. I can buy it. I can now get my distribution from BTCI and I can drip back into it. So I like to have that extra flexibility. So why invest in a Bitcoin ETF? Ease of access and simplicity. I kind of talked to this here a little bit. I like to move things around. I'm very comfortable with buying and selling stocks and ETFs out of my account on the different exchanges. It's very easy. These things are regulated, heavily regulated. There's also a lot of liquidity. I can see the price going up and down of the ETF. It's very easy to track. Very comfortable with it. It fits nicely in my portfolio with my stocks and my other ETFs. I like the income potential that BTCI offers me. Uh, I have a number of covered call ETFs that are nicely fitting into the portfolio. BTCI is another one, as is IBIT. No income, but that's all market performance. So, taking a look at these side by side, you can basically see BTCI and IBIT. This is not to say one is better, but they're different and they do different things for me. So, you can see the closing price as of yesterday, Friday, September 26. Neos's BTCI closed at 56.94. IBIT closed at 61.94. They both started in 2024. IBIT started in January. BTCI started in October. Assets under management, very different. IBIT is bigger, but BlackRock is huge. We know they are the largest asset management firm in the world. They manage $12.5 trillion. The assets under management, which is another way of saying how much Bitcoin do they own, BlackRock owns $84 billion in Bitcoin. So Neos basically doesn't invest directly in Bitcoin. They invest in an ETF, a spot Bitcoin ETF. They don't invest in IBIT. They invest in VanEck. I believe it's called HODL. They invest in that. And they also invest in treasuries for liquidity. But their assets under management are smaller, but they're newer. They're a smaller company, very competent, very innovative, a little under $800 million. They have a higher expense ratio. But again, there's an options overlay strategy with BTCI. IBIT doesn't have that. IBIT is just tracking the price through their exposure in Bitcoin. BTCI is writing options against an index, and they are also holding derivatives of Bitcoin. So they have an options overlay strategy. You can compare the price return, and it's not a surprise that the price return for BTCI is less than IBIT, but you're getting a distribution. So while you are not getting a distribution for IBIT, you can see the price and the total return are identical, 68%. The price return for BTCI, 15%. Total return is 53%. So you're getting some of your return, a sizable amount of it, with BTCI in a distribution. And that's just a personal preference. Some people want that. I like both. The distribution yield for BTCI is 29%. So there is no distribution with IBIT. Got it. So then the question is, well, hey, the distribution is 29%. What is the total return? I'm going to get to that. Total return is killing the distribution yield, which is what we want to see in an income-based ETF. Let's keep moving on. So why do I invest in both? Well, I said I believe in Bitcoin. I invest in Bitcoin. I'm also a dividend and growth investor. I like both ETFs to grow my exposure to Bitcoin. BTCI adds to my monthly distributions. It is an income-based ETF. IBIT, which is a spot Bitcoin-based ETF, adds to my portfolio growth. I am getting market performance from it. Also, I'm getting great market performance from my physical Bitcoin. So to me, they're all doing similar but slightly different things. Both of these allow me the flexibility and the ease to recalibrate in my brokerage account my exposure to Bitcoin. So if you watch my last video, same slide, I'm not going to go through all of this, just some of the basics on BTCI when it was, and I already talked about when it was the inception or started. They're managed by Neos. You can read all of this. I'm not going to go through all of this. I mentioned the options strategy. I cover this in a little bit more detail. Again, they have an options overlay strategy. They invest indirectly in Bitcoin, and they're selling call options on the CBOE Bitcoin US ETF index or the CBTX. All right. They generate distributions monthly. The total return is superb. I'm going to get to that. This options overlay, like other income-based ETFs or covered call ETFs, it lessens the risk of market fluctuations without eliminating upside. So that to me is a plus for income investors and for Bitcoin investors. So as I mentioned, BTCI does not invest directly in physical Bitcoin. Um, they have indirect exposure. And here I mentioned HODL. They invest in VanEck's Bitcoin ETF HODL or HODL. It's a proxy for direct Bitcoin ownership. They sell call options on the CBTX that I already mentioned. They also hold treasuries in cash for liquidity needs. They do not have custody of, of spot uh, Bitcoin. They just don't. They own it indirectly. Here's a little bit of background. I already mentioned the closing price, the expense ratio. They pay monthly. The yield, 29.38%. The assets under management, a little under $800 million. These are the holdings, mostly government securities and other. And that other is the VanEck Bitcoin ETF. So it's T-bills mostly. They've got it for liquidity, but they own the Bitcoin ETF. And then they have a bunch of options, and they are writing options on the index. And there are more treasury obligations. That basically covers about 97% of their holdings. So why am I showing you this? This is so innovative that they have found a way to generate income for investors without holding the underlying asset. And they do it in such a way where they are not over distributing. They are maintaining the value, the net asset value of their fund, BTCI. Not all asset management firms do a good job of that. And I take my hat off to them. And I've talked about NAV before in other videos, and I've talked about NEOS, and I've talked about Goldman Sachs, and how they both do a wonderful job of maintaining and growing their NAV. Here's a little summary of the distribution. These guys are very new, just a few months old. They started in October of 2024. The current yield for the last 12 months, but it hasn't been quite 12 months, almost 29.38%. So dollarized for the last 12 months, about $16.73. The last dividend announced for the month, $1.34. Now, is it going to be $1.34 every month? No, it's going to fluctuate a little bit. Really based on how they do with their options trades. But you can see it's a little bit of a fluctuation. It's usually always over $1, usually in the $1.30, $1.40 range every single month. And as an income investor, we like to see that. And here's a table. You can actually see these. The first one was at probably the lowest. I think it was around 112, 113. And then it's been in the 130, 140 range monthly. So total return. So we know that the distribution yield is over 29%. The total return is more than 53%. To me, that is money well spent. I like this. And you can see how they're doing against the S&P 500 and even the NASDAQ 100. They are far and away outpacing them. Here's IBIT, and this is managed by iShares by BlackRock. Closed at 61.94. I already talked about the assets under management. They're huge, 84 billion. Expense ratio 0.25%. You know what? There is no options overlay, but they own Bitcoin, so they have to take some kind of custody or have arrangement to have custody or oversight over it. So there is a cost there. I think 25 basis points is very reasonable, and that basically means for every $10,000 you invest, you pay $25 a year. So their holdings, they're all Bitcoin, 100% Bitcoin. They own Bitcoin. Total return, as I mentioned, 68%, far and away outpacing for the last 12 months the S&P 500 and the NASDAQ 100. And I think it's always kind of interesting. You can go back to the previous table where I'm showing all the different assets. Here you can basically just see how they're doing against each other. You can see the last 12 months Bitcoin, what the total return is for IBIT. They're very close, obviously. Uh, BTCI, it's a little bit less, but it's covered call. You're getting the distribution. They're both killing those market indices. I would just say don't forget the previous table where you can see the total return for Bitcoin for the last 10 years. That's really why I'm doing this. And also, we always have concerns about inflation and, fiat currency. So to me, in addition to having physical gold and silver, Bitcoin um, is something to think about. And as it becomes more institutionalized, you're going to see more investors pour their money into it. Folks, that is it. I hope you found this to be useful, enjoyable, informative. Before I close, just a friendly reminder, I am a subscriber, a long time, of Seeking Alpha. And as an affiliate partner, I can offer a discount to their premium subscription, Alpha Picks and the Bundle. Premium will give you great insight and up to date stock quotes, ETF quotes, and analysis by their team, as well as insightful, up to date analysis. I'm probably repeating myself. I'm a little tired. Alpha picks. You're going to get 2 free picks every single month. These picks are wonderful. The picks that I get, I am satisfied with. I don't buy all of them, but I buy a lot of them based on what they advise. And those picks have basically been killing the S&P 500. If you like both, you can get a bundle, and you'll get these at a discount. Premium, you'll get 7-day free trial, and I want to say $30 off. Alpha Picks, $50 off. Premium. Let me just say this: if you try for 7 days and you decide you don't like it, you cancel it before the end of the 7 days. But you're going to get a nice discount. Um, Alpha Picks, you get $50 off. The bundle, I want to say 159 off. But anyway, check the QR code, check the links right there. You can go right there to the deal and sign right up and get the discount if you like. And if you are interested in more insightful dividend and investing content, we're on X, we're on Instagram, and we are on Facebook. Those are my handles. Those are my QR codes. Until our next video, have a wonderful day and God bless.